One number. Not your GPA, not your salary, not the hours you put in at work every single week. One 3-digit number, and it was quietly running his life. His apartment application, his car loan, the interest rate the bank offered him with a straight face while he sat there nodding like it was normal. Alex had no idea this number even existed, until the day it cost him everything. Alex is 22, fresh out of college, just landed his first real job, and he's moving to Dallas. New city, new start, new apartment application sitting on the leasing office desk. He's not nervous. He's got income, he's got references, he's got a move-in date already picked out in his head. 2 days later, denied. The leasing agent doesn't look him in the eye when she says it, just slides the paper across the counter. Insufficient credit history. Alex stands there holding it like it's written in a language he doesn't speak. Because honestly, it kinda was. Nobody taught him this. His parents were cash people. His high school never covered it. His college definitely didn't. He graduated knowing how to analyze a spreadsheet and write a cover letter, but zero about the invisible financial score that was already following him around. When he was 19, a guy at a campus booth handed him a credit card application. Free t-shirt if you sign up. He signed up. $1,500 limit. He used it for everything. Groceries, going out, spring break. Paid the minimum every month because that's what the statement said to do. Then got busy one semester and missed 2 payments completely. He forgot about it. The credit system did not. 3 years later, those 2 missed payments were still sitting on his report. His one card was maxed at 94% utilization, and his entire credit history was a single account he barely managed. On paper, Alex looked like a gamble, and the system was about to price him accordingly. With the apartment denial, Alex finds another place. Worse neighborhood, smaller unit, $200 more per month. The landlord advertises it as all credit types welcome. What that actually means is, I know you have no leverage, so you're paying extra. Alex pays the extra. He needs somewhere to live. 14 months later, his 2009 Civic finally dies on the I-35 on a Wednesday morning. He needs a car. He goes to a dealership, finds a clean, used Honda Accord for $18,000. Nothing fancy. He's earning $52,000 a year now. He sits down with the finance manager feeling like a real adult. The offer comes back, 19.9% APR. He doesn't fully know what that means yet, so he doesn't flinch. The finance manager slides over a payment sheet, $412 a month, 60 months. Alex pulls out his phone and does the math right there in the chair. He'd be paying over $6,700 in interest on an $18,000 car. He signs anyway. He needs the car. But on the drive home, something shifts. A slow, quiet anger he can't quite name yet, a feeling that there are rules to this game, real rules with real consequences, and no one ever bothered to sit him down and explain them. That night, he Googles his credit score for the first time, 614. He starts reading. He doesn't stop for 3 hours. Most people expect this part to be the boring part, the discipline montage. Eyes down, grinding, sacrificing. But for Alex, it didn't feel like punishment. It felt like finally being let in on something. He pulled his full credit report from annualcreditreport.com, free, read every single line, found the 2 late payments from 2019, found his maxed card, and found something he'd completely forgotten, a $340 collection account from a gym membership he canceled by just stopping going. He made a list. Then he got to work. Month 1, he called the collections agency, negotiated a pay for delete, and sent a $340 check he really didn't want to send. Gone. Month 3, he opened a secured credit card, $500 limit, used it only for gas and his streaming subscriptions, paid the full balance every single month without exception. Month 6, he checked his score. 680. His hands were actually shaking. Month 9, he called his original card and requested a credit limit increase. They approved it. His utilization dropped from 94% to 28% overnight, without paying a single extra dollar. just a phone call. Month 14, the late payments aged past 2 years. Their weight on his score finally started to soften. He learned the mechanics the way you learn anything when it suddenly matters, obsessively. Payment history drives 35% of your score. Keep utilization under 30%. Don't close your oldest accounts. Let your credit age. Stop applying for things you don't need. There were months the number didn't budge. Months it dropped a few points for reasons he couldn't immediately explain. Months where the progress felt invisible, and he had to trust the process anyway. He trusted it.
Tuesday morning. Alex is 35. Coffee's brewing, he's half awake, scrolling through his phone before work the way everyone does. He opens his credit app out of pure habit. He almost keeps scrolling. Then he stops. 8:03. He sets his phone face down on the counter, picks it back up, reads it again, checks the date, wonders for a second if there's a glitch. There isn't. He sits with it quietly for a moment. No text to send, no caption coming to mind, just him and that number, and 13 years of Tuesday mornings where he did the boring, invisible, unglamorous work of never slipping up. He'd hit 750 2 years back, crossed 780 last spring, but 800 felt different. 800 is the number that puts you in a different category entirely, the top tier, the one lenders see and stop asking questions. Nobody gave it to him. No shortcut, no hack, no lucky break. He just showed up for years until the number reflected it.
6 months after hitting 800, Alex buys a house, $380,000, suburb outside Dallas. His mortgage rate, 6.1%. His coworker Marcus, same job, same income, 681 credit score, got quoted 7.4% the same week. Over 30 years, that gap doesn't stay small. Alex will pay roughly $94,000 less in interest over the life of that loan, just because of his credit score. That's a car, that's a college fund, that's real money that either stays in your pocket or disappears into a bank's. He refinanced his car loan after hitting 760, dropped from 19.9% down to 5.3%, saved $89 a month, moved that $89 straight into an index fund every single month without thinking about it. Credit card offers started coming in with 0% intro APR. Business credit lines, no collateral required. Financial doors that used to be closed or open only at a steep price just started opening. But the change that surprised him most wasn't on any statement. It was the silence. That low-grade financial anxiety he'd been carrying since that Dallas apartment rejection, the one so constant he'd stopped noticing it, was gone. Not because he was rich, because for the first time, he wasn't at the mercy of the system. He understood it, he'd worked it, and it was finally working for him.
Here's the thing nobody wants to say out loud. An 800 credit score doesn't mean you have money. You can have a perfect score and nothing in savings. You can be excellent on paper and still be one unexpected expense away from panic. The score tells lenders you're reliable. It says absolutely nothing about whether you're actually building a life. The real thing Alex built wasn't a credit score. It was the behavior underneath it. Paying on time every time. Living below what he could technically afford. Thinking years ahead when everything around him was screaming spend now. Staying consistent on the months where nothing seemed to be moving. Those habits built his credit score, but they also built his emergency fund, his retirement account, his down payment, his ability to sleep at night. The score was the symptom. The discipline was the cure.
There's a version of Alex who never Googles his credit score that night. He keeps paying the minimum, keeps accepting whatever rate they offer him, keeps wondering why money always feels tight, even when enough is coming in every month. Never connects the dots. That version of Alex isn't careless, he's just never been shown the full picture. And in this country, when it comes to personal finance, that gap between what you know and what you don't know is measured in tens of thousands of dollars over a lifetime. The system isn't designed to explain itself to you. The scoring models, the compound interest, the penalty rates buried in the fine print, none of it comes with a roadmap. But here's what does. The moment you stop being a passenger in your financial life, the moment you actually look at the number, understand how it works, and decide to take it seriously, everything downstream starts to shift. Alex didn't change his life because he hit 800. He hit 800 because he finally decided to stop letting one number happen to him and start making it work for him.